First here, leaked copy of U.S. draft bill shows DeFi and DAOs under regulatory lens. A leaked copy of the United States draft bill concerning cryptocurrency has been circulating on Twitter. The 600-page bill focuses on key areas of concern for regulators, including DeFi, stablecoins, decentralized autonomous organizations or DAOs, and crypto exchanges. It seems that regulators are primarily focused on protecting users with policies that require any crypto platform or service provider to legally register in the United States, whether it be a DAO or DeFi protocol. This could have a significant impact on anonymous crypto projects progressing in the United States. Any crypto platform not registered in the country would be subject to taxes, and the definition of DeFi still seems unclear. The proposed bill also seeks to provide more clarity on securities laws as they relate to digital assets, an issue that has been raised by both the cryptocurrency community and lawmakers. According to the Commodity and Futures Trading Commission's definition of a commodity, any digital asset that provides debt, equity, profit revenue, or dividends is not considered a commodity. The new bill proposes to increase costs associated with exchange compliance, which could lead to an increase in exchange fees. Any protocol or platform that trades a single digital asset would be categorized as an exchange, meaning that automated market makers would also be categorized as exchanges. The bill aims to protect consumers by ensuring that exchanges cannot liquidate users' funds in cases of bankruptcy, and by requiring them to issue terms of services for consumers to agree to before using their services. I think that's a good, a good thing for just to kind of remain consistent and compliant across the board. The draft bill proposes clear policies to bring the nascent crypto market under the purview of the law. However, many experts have pointed out that the listed policies seem to encourage strict oversight, and it is only a draft. Dogecoin co-founder Billy Marcus spoke out against the proposed new regulations, noting that they would be difficult for DeFi, DAOs, and anonymous projects. So that is what it is. I think the compliance thing might be good, just so that everyone's on the same page. They know what companies are allowed to do with their funds, but I'm sure there is more in the fine print. Next here, PayPal enables transfer of digital currencies to external wallets. PayPal is now allowing users to natively transfer, send, and receive digital assets between PayPal and other wallets and exchanges. The feature is available to select U.S. users as of Tuesday, with the feature expanding to all eligible U.S. users in the coming weeks. The first batch of supported coins consists of Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. Customers can transfer their crypto onto PayPal and spend it via checkout at millions of merchant terminals. Customers can utilize this new feature again in the coming weeks, so that is going to be really cool. The company has been granted a full bit license by the New York Department of Financial Services for the conduct. Logging into your account and heading to the crypto section of the application is all you need to do to start transferring coins. You will generally be required to complete a one-time ID verification before proceeding. Crypto transfers made to recipients outside of PayPal will incur a network fee based on their respective blockchains. However, transfers between PayPal users will not incur such fees. To protect users' privacy, PayPal generates a new recipient address for each transaction made into one's PayPal account. PayPal will also not charge fees for incoming transfers. PayPal is working to integrate other forms of cryptocurrency services, such as central bank digital currencies, to boost its digital footprint. The company is also exploring the possibility of launching its own stablecoin dubbed PayPal Coin. The discovery came after a developer found evidence of such a stablecoin within the source code of the company's iPhone app. So that stuff is way above my pay grade, but that seems cool. Definitely something to look into. If you guys want to get into a new coin, ground level PayPal coin, it might be the way to go. Do your research. If you already utilize PayPal, that may be good. Help boost the stocks probably of the company, right? Up next here, TrueFi launches on Optimism, expanding access to on-chain credit. TrueFi, a lending protocol that offers unsecured loans, has launched on Optimism, a popular layer 2 scaling solution for Ethereum. The move is expected to increase demand from non-institutional lenders. TrueFi's lending community will now have access to faster and cheaper transactions through Optimism, as well as exposure to a wider pool of retail lenders. According to Raphael Kosman, a co-founder of Trust Token, this will dramatically reduce transaction costs and network speeds for TrueFi users. He explained that since Optimism transactions are on average 77 times cheaper than Ethereum, they expect greater adoption from non-institutional lenders, which would hopefully increase global access to TrueFi's financial opportunities. Trust Token, the operator of the stablecoin TrueFi, launched a lending marketplace in February 2020 that allows financial institutions to design and launch their own financial products. The marketplace was built on TrueFi and shipped to institutional clients in November 2020. Right now, there are more than 40 protocols using Optimism. This shows that an increasing number of projects are seeking to take advantage of its improved capabilities like increased scalability and reduced fees. Optimism was designed to be compatible with all decentralized applications that run on Ethereum through something called an optimistic rollup. This is a scaling solution that works closely with Ethereum's main blockchain. As more projects move to Optimism, the total value locked in the network has seen a significant increase over the past week. TVL is currently sitting at around $369 million, which is up by nearly $100 million since May 29th. The network TVL peaked back in late April at just over $510 million. So that is pretty cool. Up next here, if you guys are into Solana, you might be interested in this. Sold your soul, Solana price eyes 35% jump as two technical signals flip bullish. At least two technical indicators suggest that Solana could see a sharp price increase in June, even after its 78.5% decline year to date. Solana has been painting a falling wedge since May, with its fluctuations inside two descending converging trend lines. Analysts who adhere to traditional technical analysis consider falling wedges as a bullish reversal pattern, which resolve after the price breaks above their upper trend lines. As a rule of thumb, the profit target for a falling wedge is found by adding the maximum distance between the upper and lower trend lines to the point of breakout. Therefore, depending on Sol's breakout level, its price could potentially rise by $20. If Sol's price reaches $58, that would represent a 35% increase from its current value. However, if the price falls back after testing the upper trend line of its range, its profit target would decrease accordingly. The Solana token has the potential to reach $44 or more after breaking out from its wedge pattern. They have a chart example of that here. Sol's recent price movements seem to be decoupling from its momentum, as evidenced by an uptick in the readings of its daily relative price index. As a momentum oscillator, the RSI is able to detect when an asset is overbought, over 70, or oversold, less than 30, which could suggest that Sol is ripe for a rebound in the near future. This situation, known as bullish divergence, indicates that bears are losing control and that bulls are likely to take over the market again. According to Tom Bulkowski, a financial market veteran, falling wedges are poor bullish indicators. He points out that they have a higher break-even failure rate of 26%. Additionally, there is only a 64% chance that a falling wedge will meet its profit target. This leaves Solana with the possibility of continuing its downtrend. The current market conditions around Solana agree with the downside outlook. This is due to the hawkish policies of the Federal Reserve and the negative impact that their tightening will have on riskier assets, including cryptos and equities. As macro risks continue, Sol could potentially move lower with a next target in the $19 to $25 area. This range served as support during the March to July 2021 session. So, and here is the Sol USD weekly price chart from TradingView. You can see an uptick. Now it's falling down. What do you guys think? Where do you think Solana is going to go? If you guys are into the token, we like it. We're into these type of coins for sure. Let me know your guys' thoughts. Up next here, Aurora pays $6 million bug bounty to ethical security hacker through Immunify. On Tuesday, the Ethereum bridging and scaling solution Aurora announced that it had paid out a $6 million bounty to ethical security hacker Pawning.eth. The hacker had discovered a critical vulnerability in the Aurora engine that allegedly placed over $200 million worth of capital at risk. The bounty was paid in collaboration with Immunify, a leading platform for Web 3.0 bug bounties, with more than $145 million in bounties available and over $45 million in bounties paid out. On April 26th, Immunify received a report from Pawning.eth about a critical flaw in the Aurora engine. This flaw would have enabled the infinite minting of ETH in the Aurora Ethereum virtual machine, which would have allowed someone to drain and siphon the corresponding nested ETH pool on Near. At the time of discovery, the pool contained more than 70,000 ETH, which is worth at least $200 million. Mitchell Amador, founder and CEO at Immunify, congratulated Aurora and Pawning.eth for their efficient handling of the report revealing a security vulnerability. He praised the quick patching of the bug with no user funds lost. Aurora had launched a bug bounty program with Immunify just 1 week before the discovery was made. Frank Braun, head of security at Aurora Labs, spoke about how they view the bug bounty program as the final step in a layered defense approach. He remarked that they would be using this particular bug as a learning experience to improve earlier security measures like internal reviews and external audits. Hackers have been targeting cross-chain communication protocols lately, taking advantage of weaknesses in the system. In February, the Wormhole token bridge was exploited, resulting in the loss of over $321 million in digital assets. These types of attacks highlight the need for improved security in these types of protocols. So, sorry to anyone who's lost their money due to a hack before. Thankfully, this was caught here with Aurora. But again, make sure you're always being as secure as possible. Do your research before putting money into anywhere. Make sure that you're doing everything you can. And last but not least here, Chainalysis exec totes blockchain analysis to Senate Homeland Security Committee. At the hearing of the United States Senate Committee on Homeland Security and Governmental Affairs, HSGAC, entitled Rising Threats, Ransomware Attacks and Ransom Payments Enabled by Cryptocurrency, the collection and processing of information was a major theme. A panel of private sector experts discussed the problem of ransomware attacks and the challenges of collecting and using the information necessary to fight them. Gary Peters, the chair of the committee that introduced the Strengthening American Cybersecurity Act in February, said that the government does not have enough data to understand the ransomware threat. He added that attackers usually demand payment in cryptocurrency. Several figures have been provided to quantify the problem of ransomware attacks. Jackie Burns Coven, head of cyber threat intelligence at Chainalysis, said that the company had identified a record $712 million paid to attackers in 2021, with 74% of the money going to threat actors in Russia or with links to Russia. It's interesting. Ransomware is a form of extortion that has existed for many years. Institute for Security and Technology Chief Strategy Officer Megan Stifel and Coveware CEO Bill Siegel said they noted that one of the major challenges for law enforcement is knowing what information to collect and how to organize it after an attack has occurred. Victims of attack oftentimes feel overwhelmed by the amount of information that is demanded from them by different agencies. These agencies require different but similar information from the victims, and this can often be confusing and frustrating for them. Yeah, absolutely. You just got hacked. People are asking for all your information. You already got hacked, and now these new people are asking for it. So, absolutely. Additionally, the process of prosecuting an attacker can take years, which can be discouraging for victims. These factors, in addition to the concern that attackers will not release an encryption key if law enforcement is involved, help explain why victims of attack are often hesitant to report the attack. Stifel suggested that having a designated single agency to receive and triage data for after an attack would improve information collection. This would be especially effective if businesses establish a relationship with that agency prior to the attack. According to Coven, blockchain analysis can provide a more immediate understanding of the network of wallets and services that are involved in illicit activity, as opposed to the lengthy and complicated process of traditional financial investigation. U.S. government sanctions have been highly effective against ransomware actors and their facilitators, Coven continued. She pointed to sanctions against Russia-based cryptocurrency exchange Garantex and trader Suex as examples. Money flows dropped to almost zero after sanctions, she said. In addition, blockchain analysis can track the rebranding of attackers, and Chainalysis has developed. They have developed technology, to track funds through cryptocurrency mixers. So, some positive news, these attacks are happening, hacks happen, but hopefully with new technology, new security systems in place, it will be a lot more few and far between. And because cryptocurrency is so new, I think a lot of these things just have not been implemented yet. So hopefully more to come on that. That is all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.